I'm going to share with you guys my favorite candlestick pattern that has helped me pass numerous funding challenges, helped me secure a lot of my payouts, and for a lot of the people that know how I trade, they know how much I love this pattern and how beneficial it has been, not just for my trading, but for everybody that's learned it along the way. If you want to learn the best candlestick entry pattern, I'm going to show it to you guys in the next 5 minutes. This can work with any strategy really. If you use support and resistance, supply and demand, any kind of strategy that you use that requires a key level entry and price action, this is an amazing candlestick pattern to get some really strong winning trades and results. This has been one of my strongest confluences I use along with a couple other things in my trade. So let's hop into my computer and let me show it to you guys. If you guys enjoy this content, make sure to like the video and subscribe. All right, what's going on everybody? We are in my computer, and in the next few minutes I want to just explain to you the most powerful candlestick pattern that I like seeing at a zone, right? At a point of interest. For me, it's going to be a supply and demand zone. For you, it may be like a support and resistance, a key level, you know, especially if you're trading indices and things like that. But for me, it's typically a supply and demand zone. And on the higher time frames, it gives me direction. And on the lower time frames, like on an hourly or something, a 4 hour, it can give me a beautiful entry. And what I said at the start of the video is, like, I'm not even making that up. It is probably one of the reasons I've passed a lot of challenges. Probably one of the reasons I've gotten some really amazing payouts and been able to get out of some big drawdowns. Now it's only one confluence, right? It's not something that's gonna make you profitable, but if you have a working system and you add this to your arsenal, it's really gonna help you out. And this is just something I learned along the way, and it's just one of the many confluences that I use. This is probably my favorite. I also love using like the forex sentiment tool and things like that. But this is one of my favorite candlestick patterns, right? Using price action in conjunction with market structure, market direction, all that stuff. And it's basically I'm just gonna call it the three pin pattern, right? And it sort of looks like this. I just kind of googled it. I didn't even know it would be, you know, on Google, but they have it labeled here as, you know, bearish pin bar, or, you know, yes, it is a pin bar, but I'm gonna explain it to you guys in the way that I like seeing it. Okay, so we're gonna look at EJ on the hourly, 4 hourly, daily, and I'll see if I can find you guys an example on the weekly as well, and how I kind of use it for each time frame, right? For the hourly, a perfect example is like this one right here. Okay, this is a bullish scenario of it. Okay, so let's say you have a key level, which is one right here. This is like the perfect 3-pin formation, right? You have one candle pushing into the zone, leaving a wick. The middle candle will always have the longest wick, which is going to be your pin bar basically. Third candle, so if this is the bullish scenario, it should not break the low of this wick. It should probably stop somewhere to make it look like it should look basically like this is the prime example of it. And the third candle, you want to have it break the pin bar. So as it kind of creates this first one, then it creates the pin bar. Then the third candle, which does not break the low of the pin bar, it breaks the top in the bullish scenario. And this would give you sort of your entry. You'd enter right on the break of that, or if it's already taken a little bit above, and you're always going to put your stop loss somewhere just close to here, because if this candle reverses or if this candle comes back down here, this for me at this point has been invalidated. So that's sort of the bullish example. Here's a really good let me delete this. It's a really good, it's a decent bearish area. So we have, let's say this was one of your zones. I'm just gonna move this up. This was your zone. Let's look at it a little bit closer. So it's gonna be like this. Okay, so you have the first one pushing into the zone. That's your one side of it. That's your pin bar. And then the third candle left a small wick to the top, broke the low of this candle, be entering at the break of this low right here. Your stop loss would be right here, because again, if it breaks the top, it's going to invalidate our trade. Your entry is going to be right there, and then, you know, wherever this goes. But this in conjunction with sort of supply and demand, key levels, things like that, works excellent. So that's kind of like some examples on the hourly. Let's go to the 4 hour and take a look at it. And I know a lot of people probably thinking like, yes, on the certain time frame that we're looking at, it looks like a pattern, but on the lower time frames, it's actually just basically a head and shoulders, right? It's basically just a head and shoulders taking place on the smaller time frame. So let's take a look at a couple of 4 hour examples. This isn't the best trade here, but this is a decent example that you might see happen in the market, hitting a key level, small wick, pin bar, break of the low. Even if you entered this trade here, you most likely would have gotten out at break even. So a small example on the 4H This is a really good example on the 4H as well. So you have, I'm gonna assume this was probably a zone on the lower time frames. So you have the candle pushing in, you have the middle pin bar candle. Now in this example, we did not break the low, right? We didn't. Let me just leave this for you guys so you can see a bit more clearly. We didn't really break the low, right? We didn't break this candle did not break the low of this candle. So in a situation like this, I don't get the entry there. What I'm doing is I'm waiting for the candle afterward. Or if I'm coming to the chart that's a bit later, right? If I come to the charts when this candle is being produced, I've already, this hasn't broken over, or if I've missed it, my entry would look I would still want to see the break of this middle pin bar. I still want to see the break of that. So even if it's the following candle, I'll enter on the break of this, but this time, instead of putting my stop loss all the way above, or I'm just going to put it on the third candle because I'm assuming that this 3-pin pattern has completed. So 1, 2, 3, and I'm not expecting this candle to break this, because if it does, then my trade has been invalidated. So this is kind of a perfect, not the perfect, but this one over here is a really good example. And I think there's a couple other ones here as well that you can see on Google. Like this one's a really good one. This one's a really good one. This one's a really good one. We have the left wick, we have the middle wick, and that. And then so if you go to the lower time frames, yes, really, it's just the head and shoulders being, on really smaller time frames. Now let's move on to the daily and see if we can take a look at a daily example and how I go about using it on the daily, because I don't really use the daily chart too much. If I ever if it's ever at a key area, right, if it's ever at a key point or a key area in the market, right, wherever this may be, like this is a key area in the market, let me just put a horizontal there. If it's ever at a key area, so this is a key area on the daily, and I see something like this happening on the daily chart. So we have the 3-pin happening on the daily. So there's the left one, the middle pin bar, and the third one. And the day has just started and I'm looking for trades. I can anticipate that the market is going to move down. Like this is a really good confluence for me to know that we're going to move down. Now I'm not a swing trader, so I wouldn't be placing a trade here, anything like this. This would be too much for me. It'd be a great trade, but I don't really take swing trades. So what I would go down is I would now go down to my lower time frames and try to look for an entry. But this would give me a confluence knowing, I would know for a fact that yes, we are about to 100% move down. So it's a great directional finding tool as well. So if your weekly chart or your not your monthly, but your weekly, your daily is creating one of these patterns, we can see that one there. Then it's a good directional bias to know that, okay, for the moving on into the week, we may be heading in the direction, especially if it's in a key area, right? So like this is a really good one on example on the weekly. It's not really at a key area, but I mean, maybe you could say it is. It's kind of at this demand. But if I see something like this has already been created on the weekly and we're on this day or we're on this day, I can anticipate the market to move up and go and look for trades. I usually use this on the lower time frames. So I've shown you guys an example on, the hourly, the 4-hour and things like that. I've always gotten so many amazing results. And if you see me share trades in Discord, where I share all my setups mostly, you'll see a lot of my trades are based on this. And I have something called the A+ setup, which is like my best setup, which like has over about a 70% win rate. This is one of the requirements for me to enter that trade. So I hope you guys found this video helpful. Make sure to hit the like button and subscribe.